Welcome to The Debate. It is January 21st, 2026. Today we're trying to dissect a demographic anomaly that is, frankly, frustrating economists and terrifying HR departments. If you just read the headlines, Generation Z is checking out. They're quiet quitting, they're doom spending, and they are supposedly financially illiterate. But if you look at the ledger, specifically the housing and labor market data from places like Cauditality, Florida Realtors, and the MIT Center for Real Estate, well, a completely different picture emerges. We're seeing a generation of, I'd say, ruthless pragmatists who are hacking a broken system with algorithms, geographic arbitrage, and a complete reimagining of what credit even means.
Or where we're looking at a generation in varying states of trauma response. Because while you might see pragmatism in the spreadsheets, the 2025 Next Gen Homebuyer Report and the current work culture pattern study, they paint a picture of just exhaustion, burnout, and a complete collapse of trust in the very institutions that were supposed to protect them.
And that's it. That is the central tension we need to resolve today. I'm the advocate. I look at market efficiency, adaptation, and, the numbers.
And I'm the dissenter. I look at the human cost of that efficiency. So today's question, is Gen Z a cohort of quiet quitters who just lack the grit to survive, or are they rational actors playing a new game because the old one is rigged?
All right, let's get to work. I want to start by really challenging the prevailing narrative that I think colors every single conversation about this generation. There's this idea that Gen Z has failed to launch. We hear about the boomer transfer of wealth that never really trickled down. We hear about the vibes economy. But when I analyze the hard data, the numbers from Redfin and Cauditality, I just don't see failure. I see a surprising level of success.
Success? By what metric, though?
By the most important metric of the American dream, ownership. The data indicates that Gen Z homeownership rates at age 24 are hovering around 27.8%. Now, for context, that is actually higher than millennials or Gen X were at the same age. So if the economy is so broken, and if this generation is so lazy, how do you explain that? How are they acquiring assets faster than their predecessors? And furthermore, the current work culture pattern study shows that 51% of Gen Z explicitly state they prefer high-paying, demanding positions over lower-paying, flexible ones. They aren't hiding from work, they are chasing yield, maximizing their return on investment. So my position is that this is a generation of resourceful pragmatists. They're using house hacking, they're leveraging AI to bypass human gatekeepers, and they are moving to markets that make sense mathematically. They aren't victims, they're the most adaptable capitalists we've seen in decades.
I appreciate the optimism, and frankly, I wish I lived in the world that your spreadsheets describe. But I think you are confusing survival instincts with, flourishing. You cite that 27.8% homeownership rate, but you're ignoring the quality of life required to achieve it and the psychological state of the other 72% who are left behind. My position is that the success stories you're highlighting are actually symptoms of a profound structural failure. We are looking at a generation where, according to the current work culture pattern study, 66% of young employees report burnout. And this isn't just being tired after a long week. This is clinical exhaustion from excessive workloads and task monotony. And look at the sentiment data from Clever Real Estate. You have 21% of Gen Z who believe World War III is more likely to happen than them owning a home in the next 5 years. That is not teenage angst. That is deep-seated economic nihilism. When 60 to 62% fear they will never own a home, the social contract, the whole idea that if you work hard, you get ahead, is broken. So their behavior, from quiet quitting to doom spending, isn't a lack of discipline. It is a rational rejection of a system that demands everything from them and promises nothing in return. They aren't hacking the market. They are traumatized by it.
And you use the phrase rational rejection, which brings us directly to our first core area of debate, the workplace. You mentioned the burnout stats, but I want to look at the other side of that coin. We have this phenomenon that we've labeled quiet quitting. The current work culture patterns study indicates that 49% of Gen Z employees tend to do only the prescribed tasks with a minimum of effort.
Minimum of effort. See, even the language of the report is biased.
It's accurate phrasing for an efficiency analysis. Historically, we might have just called this slacking off, but let's look at it economically. If you are doing the bare minimum, you are artificially capping your productivity. Yet the same study shows only 45.3% are fully committed to their responsibilities. If you have half your workforce actively disengaging, you create a productivity drag that suppresses wages for everyone. So my question is this burnout, or is it a lack of professional grit? Because you can't expect to climb the ladder if you refuse to even step on the first rung.
See, that's the corporate view. Quiet quitting is a misnomer. It's designed to shame workers. I prefer to call it acting your wage. The study explicitly links this behavior to task monotony and a lack of autonomy. But here's the critical insight from the data. 51% of participants do not discuss their emotional state at work because of professional risk.
Which suggests a communication breakdown, certainly.
It suggests fear. They are terrified that showing any vulnerability will kill their careers. So they shut down. They do exactly what's in the job description. No more, no less. Because they've seen millennials give 110%, stay late, answer emails at midnight, and still get laid off over a pre-recorded Zoom call. It's not a lack of grit, it's a boundary. Why on earth should they invest grit in a company that sees them as a line item on a spreadsheet?
I understand the skepticism. I do. But here is the paradox, and I need you to help me square this circle. The data shows 86.7% of Gen Z place significant importance on work-life balance. That's fine. But, as I noted earlier, 51% also say they prefer a high-paying, demanding position.
Right.
This looks like economic delusion. You can't have the salary of a high-performance executive with the boundary setting of a part-time freelancer. I mean, import equals output. Is it possible that this generation has a fundamental misunderstanding of the relationship between labor and value creation?
It's not a misunderstanding of value, it's a reaction to inflation. The reason they prefer the high-paying, demanding job isn't because they love stress. It's because the average salary no longer covers the cost of living.
So it's desperation for liquidity.
Exactly. A low-stress job used to pay the rent. Now, a low-stress job means you might be living in your car. They need the high pay just to survive this cost of living crisis, but they need the balance to maintain their sanity because the world feels incredibly unstable. The study draws this contrast perfectly. Millennials valued stability and responsibility. Gen Z values flexibility and asserting personal boundaries. They know that stability is a lie. They are trying to solve an impossible equation. How do I earn enough to live without working myself to death?
I'm not convinced that the equation is impossible, but I will concede it is significantly harder than it was 20 years ago. However, this leads us to what they are doing with the money they do have. This brings us to the consumption data and this concept of doom spending.
This is one of the most fascinating and heartbreaking trends. The Mirror highlighted this. You have young people blowing cash on luxury goods, designer bags, expensive holidays.
Which, from a financial planning perspective, is catastrophic. If you're struggling, the first thing you cut is discretionary spending. That is Finance 101.
But you have to look at the psychology, which the report touches on. If you do the math and realize that saving for a deposit on a home will take you 20 years, and that's assuming prices don't rise, which they will, the goal of homeownership moves from difficult to, well, mathematically impossible.
So they give up?
In economics, we might call this hyperbolic discounting, but let's just call it coping with the apocalypse. If the future looks like a mirage, you prioritize the now. Why save for a house you can't buy when you can buy a nice bag today and feel a momentary hit of dopamine? It's logical nihilism.
Logical nihilism is a poetic phrase, but is it accurate? The clever real estate data shows that 28% of Gen Z admit their own spending habits are a factor in not affording a home. That is a significant number. It suggests that for nearly a third of them, the barrier isn't just the market, it's self-discipline. You can't blame the system entirely when you're voluntarily opting out of compound interest.
But are they opting out or are they being pushed out? We have to talk about the Nepo factor. The Next Gen report shows that 28% of Gen Z homeowners got down payment help from their parents. 33% moved back home just to save.
Which is a valid strategy.
Leveraging family capital is a tale as old as capitalism.
It's a strategy for the privileged, and it distorts the market for everyone else. 62% of Gen Z assume their peers only bought homes because of family money, when the perception is that the meritocracy is dead, that the only way to win is to have the bank of mom and dad. It incentivizes that doom spending. Why bother trying if the game is fixed?
I think the Nepo narrative is a little too convenient. It ignores the grit we talked about earlier. Let's talk about house hacking. The Totality data shows something fascinating. Gen Z isn't just waiting for handouts. They are buying duplexes to rent out one side to cover the mortgage.
Becoming landlords out of necessity.
And more importantly, they are engaging in what we call geographic arbitrage. The data shows high mortgage application rates in places like North Dakota, Iowa, and Nebraska.
North Dakota?
Yes, the flyover states. This proves my point about pragmatism. They're looking at the coastal markets, seeing they are unaffordable, and rather than buying a Gucci bag, they're moving to where the math works. They are sacrificing location for ownership. That is not a generation of doom spenders, that is a generation of savvy investors making hard choices.
Or it's a generation so desperate they're uprooting their lives to move to places where they have no social support, just to own a box to live in. And let's be honest about house hacking. It sounds cool, but it essentially means you can't afford your home unless you monetize your privacy. You have to become a landlord to survive. You have to participate in the very rent-seeking behavior that caused this crisis. That's not the American dream. That's the gig economy coming for your living room.
Efficiency often looks like desperation to those clinging to old models. But you mentioned monetizing privacy, which is the perfect segue to our final and perhaps most technical pillar, the algorithmic twist.
This is where the story gets dystopian.
This is where the story gets efficient. The NextGen report indicates that trust in human gatekeepers is collapsing. Trust in loan officers is down to 19.5%. Trust in banks is at 40%. Gen Z is bypassing the biased human element and going straight to the machines. 43% of them use AI and tools like ChatGPT for home buying information.
Because they've lost faith in humanity. That isn't a tech victory, that's a societal failure. They trust a chatbot more than a person, because the person has likely rejected them or tried to upsell them.
But look at the results. The Florida Realtors data discusses the adoption of VantageScore 4.0. For our listeners who aren't credit analysts, this is a major shift from the old FICO models. Traditional credit scores look at debt repayment, credit cards, car loans. But VantageScore 4.0 uses trended data. It looks at rental history, utility payments, telecom bills. This is huge. It takes people who were previously credit invisible because they didn't have a credit card and makes them visible because they pay their rent on time.
I understand the mechanism, but let's look at the implication. We are increasing the surveillance surface area of our lives. Now, if you miss a phone bill, you jeopardize your housing. And this inclusion is driving some very strange behaviors.
Such as?
The concept of unrelated co-borrowers. The algorithm is now green-lighting mortgages for groups of strangers. The NextGen report says 32% of Gen Z are considering co-buying, not with a spouse, but with friends, or even business partners they find online.
Tenancy in common. It's a legally sound structure.
It's a roommate situation with a 30-year financial shackle. The Clever Offers report says that 30% have considered squatting or living in a car. So the solution to this desperation is an algorithm that lets you sign a mortgage with a stranger? The algorithm isn't fixing the market. It's optimizing a nightmare. It's helping young people squeeze into a market that clearly doesn't want them there. And we have to talk about who or what they're competing against. The Algorithmic Investors. These are bots buying houses.
Hold on, I need to interrupt you there because this is the most critical piece of data we have, and it comes from the MIT Center for Real Estate. There is this narrative that robots are bad and algorithms are racist. But the MIT study found something that contradicts that entirely. It found that algorithmic pricing actually reduced the racial price penalty by 45%.
What does that actually mean in practice?
It means that when humans price homes or approve loans, bias creeps in. Humans undervalue homes in minority neighborhoods. Algorithms, when properly calibrated, care only about the data. They don't see race, they see cash flow and comparables. So while you call it a nightmare, The data suggests that the algorithmic twist is actually making the market fairer for minority buyers who have been historically shut out. That is a massive ethical win for efficiency.
So let me get this straight. We fixed racism by making houses expensive for everyone.
That is a gross oversimplification.
Is it? The algorithm might be fairer in who it exploits, but it's still driving up prices to the point where, according to Clever Real Estate, 47% of Gen Z would buy a home with asbestos, 41% with pests, 36% with mold.
Those are fixer-uppers. That's how you build equity.
No, a fixer-upper has dated wallpaper. A house with mold and asbestos is a health hazard. The algorithm, this fair machine you love, is helping them buy that moldy house with a stranger in North Dakota. Are we really celebrating that? We are celebrating that a 24-year-old has to use a supercomputer to find a hazardous property in a state they've never visited, co-signed with a person they barely know, just to avoid renting. That is an indictment of our entire economic structure.
I see a generation willing to get their hands dirty to build wealth. I see resilience. If the alternative is renting forever and complaining about the system, then yes, buying the house with mold is the rational, gritty choice. It's an entry point.
It's an entry point into a burning building. And I see a generation engaging in self-harm because they've been told it's an investment.
We are coming to the end of our time, and we need to synthesize this. From my perspective, looking at the Quartality MIT and Florida Realtors data, I maintain that Gen Z is the most adaptable generation we have ever seen. They've been dealt a terrible hand: inflation, high rates, legacy debt, and they are playing it with remarkable skill. They are leveraging AI to democratize credit via VantageScore, they're utilizing house hacking to subsidize their living costs, and they are willing to move. They prove that the system still works if you are willing to evolve with it.
A response. When 21% think World War III is their exit strategy and doom spending is the only way to feel a sense of control, the economic soul of the country is broken. The stats might say they are buying, but the stories say they are suffering. They are buying moldy houses with strangers not because they're savvy, but because they are terrified of falling into the abyss.
It comes down to whether you judge the economy by its outputs or its inputs. The output is ownership. The input is messy.
The input is dehumanizing. And if the future of the American dream is found in an algorithm that helps you co-buy a hazard with a stranger, I think we have to ask if the dream is even worth dreaming anymore.
Or perhaps the dream has just evolved, and Gen Z is the only one awake enough to see it.
That's a terrifying thought.
Is it the rise of the machine or the fall of the human?
Thank you for joining us.
Thank you for joining the debate.